If you're looking for a simple, objective scalping strategy with a high success rate, this lesson could completely change the way you trade on the 5-minute chart. Today I'm going to show you an extremely efficient method that works very well, even in sideways markets, which is rare for scalping strategies. Beware, skipping key details will ruin your execution. So watch until the end, because every rule here makes a difference in your results. Now let's get straight to the chart. This is a scalping strategy for the 5-minute chart. You can utilize it in Forex, crypto, or stocks, provided that the pair has good liquidity and volume. This helps to prevent high spreads and gaps that could detrimentally affect entries and stop losses, especially since our entries will be quite brief. In this example, I'm using EURUSD, but the method works in any liquid market, provided it's on the 5-minute chart. Later in the video, I'll let you know which platform I like to use for this strategy, one that enables us to utilize scalping strategies without encountering problems such as high spreads. Now let's proceed. What indicators will we be using? I'm going to put them all on the screen again for you so we can go through them together. Let's look at the indicators right here on TradingView.com and search specifically for ribbon. Moving average ribbon will appear on your screen. Simply double-click the indicator. You can then delete the bottom two averages, and for the remaining upper ones, switch them to EMA. The first of these will be set to the high option, and the second will be designated as the low option. You're going to set this to 20, and right here you'll also input 20. After that, you can change both of them to white. And you can click OK. Now notice that we have this distinct band of moving averages here, cutting right across the chart. And the next indicator that we're going to put here, again in indicators, is the Andean oscillator. We'll be selecting this option here from Alex Groover. And the Andean oscillator will appear. Let us understand how the indicators work here. Simply put, if the chart is trading, making peaks and troughs above the 220 period moving averages, this channel of averages, we have an uptrend. Conversely, a downtrend is indicated when, for example here, the market forms peaks and troughs below the 20 period moving averages. Now another important point, if on the Andean oscillator down below, we observe the green line positioned clearly above both the orange and the red lines, that indicates an uptrend. Conversely, if the Andean oscillator shows the red line positioned above both the orange and green lines, then that indicates a clear downtrend on the chart. Therefore, we're going to utilize both indicators to determine the optimal entry point that aligns with the prevailing trend. How's this going to work? Placing buy orders is quite simple. But before we continue, many of you often ask me which brokerage I personally use for trading Forex, stocks, or cryptocurrencies, and the answer of course is EXNESS. For me, it's the best and most complete brokerage out there. If you've ever been frustrated with your broker, you'll get what I'm saying. Many brokers have slow order execution. On EXNESS, the execution is instant. Some brokerages charge extremely high spreads. At EXNESS, the spreads and associated fees are exceptionally low, truly among the absolute lowest you will encounter in the entire market. Ever waited days for a withdrawal? With EXNESS, funds are processed almost instantly. And best of all, leverage is adjustable to almost infinite as you wish. If you want, just control your risk. So if your brokerage freezes, overcharges, or delays payments, it's time for a change. The link will be in the description, and as I said, I consider it one of the best brokerages with the lowest fees on the market. So how exactly do I go about using this indicator? The very first thing I'm going to look for is the price establishing a clear uptrend. Here, it entered an uptrend, experienced a pullback, and the price reversed. When it moves back within these moving averages, making a significant pullback without dropping below and continuing to trade lower, and then in the subsequent candles it forms a green candle, thereby continuing the uptrend of an uptrend and breaks out of the channel just like this candle did, an extremely strong candle indicating that the price is being rejected by this region and isn't likely to continue falling. So what do I look for next? I will check the Andean oscillator to see if it confirms, if the green line will be above the orange and the red lines. Here, it did confirm. In that case, at precisely this point, I'm going to place my buy entry. My stop loss is placed slightly below the candle's low, so the low of the green candle is right here at 0.07. I have two options. Either I can set my target 2 times higher at 0.14, which would have already hit our profit goal, or I can continuously move my stop loss upward with the price action. With this last moving average line, and the price would have taken us out here with a 0.21% profit. This means I risked 0.07 and I got a profit that was 3 times greater than my initial risk. That's an excellent risk-reward ratio for a scalping strategy. Now for a downtrend, it's the exact opposite. We'll await the chart to establish a clear downtrend, trading below the moving averages, re-entering the channel without breaking upwards. So it must not cross above. Then we wait for the Andean oscillator's red line to be positioned above both the orange and green lines, as it was right here. Finally, we look for the sell trigger. What is that exactly? A red candle that exits the region. This candle here did exit the region, so I could place my entry at this candle's close, my stop loss slightly above its high at 0.03. My target would be 2 times lower, and it hit already on the very next candle, basically here at 0.06, or I can also trail my stop loss down by 0.03 because that's the inherent risk, you know? Here it hit 0.15, so we would have most likely exited around 0.12. Alternatively, I can apply the method I explained earlier, which involves tracking it with this final moving average line. It would have taken us out here at 0.04 in terms of return. But in any case, that's an excellent result. This is a scalping strategy, and the financial market is risky, so you can lose money. This video is not an investment recommendation. If you don't feel confident, seek help from a professional. And if you enjoyed simple educational videos like this one with easy-to-use daily indicators, subscribe to the channel, turn on notifications, leave a like, and comment more indicators so I know you want more videos like this. Thanks, and see you next class.